So in this segment, we're going to be talking about post-Brexit powers mean regulators get greater oversight, city figures one. So this is a bit of a boring video, I'll be honest. It's about like the financial stuff. So I don't know if you want to watch it, listen to it, feel free to. If you want to switch off, then it's fine. Because like I said, it's going to be about like the Prudential Regulatory Authority and all these kind of groups. But I found it quite interesting how much business are kind of worried that they're not going to get the kind of post-Brexit kind of benefits from Brexit, which, you know, these are some of the people that would have caused the financial crash back in 2008. And we'll be talking about the landscape of the kind of banking sector later on. It's not my area of expertise at all, but I don't think you have to be too much of an expert to see some of the issues that are happening already. So ex-ministers and city figures have warned that the government is not doing enough to improve the scrutiny of regulators after Brexit, in a sign that past rows about protecting the independence of the UK's top financial regulators could resurface in the coming months. Following Brexit, UK financial regulators such as the Prudential Regulatory Authority and the Financial Conduct Authority were given the power to replace existing EU laws with new rules tailored to the UK markets, significantly increasing their influence. So very surprising that the Tories gave the power to replace the financial rules to the regulators, given the fact that the Tories want aggressive deregulation, and this sector would be a good option for them in terms of what they actually want to do. I'm sure certain donors would love to come in and use this as an opportunity to cash in until the next bust and then ask for a bailout, but it's not all in the hands of the regulator. Jeremy Hunt overruled them around the end of last year over regulations they wanted to put in place. Remember covering it at the time. Given that the Tories want to make it so pension funds can buy illiquid assets, I can see the Tories forcing at least that one through, which if there is any kind of financial shock, it would be hard to sell off said assets. You know, for example, these pension funds sold off a lot of the bonds they had because of the Liz Truss budget. So they would face issues if they faced a similar sort of crisis where they had a load of bonds, but they also had a load of illiquid assets like wind farms and stuff. Who's going to buy a wind farm? Or, you know, very quickly anyways. But the Tories are gambling that such a raid on pension funds would lead to short-term gains, and that when the time bomb goes off, it would be Labour holding the bag effectively. So the government have overall control here. If they want to, you know, get rid of parts of Solvency II, if they want it deregulated, then they will make it happen. They can make it happen. They can't blame anyone else for it. While some planned post-Brexit reforms, such as scrapping Solvency II, require new regulation, other proposed changes, such as changes to banks' capital requirements, do not. And obviously, if the banks don't have enough capital, if anything happens to them, they can go under, and you know, the government may have to step in to cover things like deposits. We saw kind of, I think the American government kind of step in when the Silicon Valley Bank collapsed. You know, they do have FDIC insurance over there, but only covers a certain amount. The Prudential Regulatory Authority, the PRA, is already working on tweaking the latter, much to the annoyance of smaller banks and business groups, because what they want is to hold as minimal capital as possible, because they want to lend out as much money as they can. But the problem is, if anything does happen, if the loans go bad, for example, and you don't have enough capital to cover other things, then you're in big trouble, and you're going to be asking for a taxpayer bailout. The City UK's Emma Reynolds told City AM that, quote, given the regulators get a lot more power post-Brexit, there should be some kind of additional oversight. What we currently have isn't fit for where we are, end quote, she said. The UK Finance agreed, saying, quote, with regulators being handed increased powers and expanded remits, it is critical that there is enhanced oversight and independent scrutiny of their work, end quote. And these are trade bodies who work for finance and banking mainly. They claim they represent those industries. The issue is that members of these regulators can get pulled up on in select committee hearings. What they want, I think, is for businesses and trade bodies to be able to directly talk or confront the regulators over the regulations, which is dumb. A dumb idea, because it gives businesses a chance to try and intimidate regulators. We have these committees for a reason. If there's an issue, then they can raise it with the select committees, then they should be able to mention it to the regulators if needs be during the committee hearings. They're talking about call-in powers 2.0, which, you know, this thing is wow. Moves to increase the oversight of the regulators sparked a conflict in the city last year. Both Liz Truss and Rishi Sunak wanted to introduce, quote, call-in, end quote, powers to be able to revisit or overturn decisions if they felt regulators made the wrong call on rules. A move Bank Governor Andrew Bailey warned against as he sought to defend regulators' independence. And wow, Andrew Bailey being on the right side of something despite the rise in interest rates. Wow. It's shocking, isn't it? This move would have been stupid. Who would even have these powers to do a call-in or overturn decisions? Is this going to work like VAR or something, where the government or another body asks the regulators to take an additional look at something? Imagine if you're a regulator and you made a decision and the government's like, actually, you're going to check that again, pal. It's just stupid. Why would you make a body that just rules over regulators? It would make the regulators pointless. I just don't get it. Sunak, after his appointment, backed down, but a range of proposals have been put forward since for boosting regulatory scrutiny, and it might be the case that Sunak keeps some of this stuff on the table in order to continue to get donations from these parties to say, look, we're not going to do it this time round, but if we win again, dog, we might do it next time, and the only way we're going to win is if you pay up. One option is to strengthen parliamentary oversight through a new parliamentary joint committee. Another is to create an independent body which could both provide expert advice to legislators and question the regulators directly. Proponents of an independent body say that model does not threaten the independence of regulators and warn that parliamentary model could end up politicising the debate. And you can see the framing here it seems very pro the independent body model, but I think personally having Parliament do this is not a bad thing via the select committees, as long as there's more anti-corruption measures put in place. We can't have MPs on these committees taking any donations from the people they're overseeing. But more than just that, other MPs who may be funded by these interests cannot be allowed to talk to the committee members, because there's a conflict of interest there, and we already saw that in action with ministers listening to MPs who are in the pocket of certain companies. That was that MP fairly recently, who said, I get, between legislation being passed, I get about 5 to 10 minutes or whatever with ministers. I can talk to them during that time. It's like, bro, what the hell? What kind of dead system is this? And, like I said, they already have oversight. These committees have oversight and can ask regulators questions. They ask Andrew Bailey stuff all the time. What more do these trade bodies actually want? The point about it being politicised is fine. That's a fine point to make. Normally, from what I've seen, though, these committees are pretty neutral. You had Conservatives on the select committee that Johnson was on. They some of them are lighting him up. In fact, I think the Tory ones actually did more damage than the other ones. The independent body, or so-called one, I guarantee you, if set up by the Tories, will be full of jobbers and party donors. People rife to regulatory capture, let's be honest. Let's not forget what they did with the BBC as well, with a guy they put in as chairman. He was a guy who helped Johnson get a credit facility, £800,000 credit facility. We don't know who the person was that would have given that initial loan either. And if this independent body had the power to call stuff back, they would. There's no guarantee that they're going to be neutral. There's a reason why industry wants something and regulators don't. And generally, if that happens, you want to side with the regulators, especially when you have decent ones like the UK has. As the increasing number of firms have snubbed London and have chosen to list in other financial markets, the government proposed in the FSM bill that regulators be mandated to cover competitiveness when making decisions, saying, quote, "This is a pivotal moment, and against the backdrop of concern about the city losing out altogether out to other financial services, becoming a litmus test of whether the government is really intent on turning its words into actions and strengthening the city," end quote, one Conservative MP told City AM. The problem is, do you know what damaged the city? It was Brexit. One of the reasons why ARM are not setting up on the UK stock exchange is because of Brexit. And there are many, many other companies that will do the same. Many of them will go to New York rather than going to other European stock exchanges, because New York is the premier stock exchange in the world. Competing with New York's already a nightmare, but Brexit only made it worse. Reynolds said, quote, "Our firms want the competitiveness mandate," square brackets there, "to have some bite," end quote, adding that greater oversight of regulators would force them to act according to their mandate. Talking about the competitiveness mandate, and this is, more buzzwords. What more do you need to compete, big man? We saw Silicon Valley collapse recently, more as well as other banks. Competition seems to be code for deregulation as a means to bring in more traders to the UK rather than the US, because we have more lax laws. I get you want smaller banks to compete with bigger banks, but what you don't want to see is a series of smaller banks in trying to compete with the bigger banks collapse because they don't have the capital and needing taxpayer bailouts. You don't want to see that, Chief. Or maybe you do, I don't know. All this will do is create a race to the bottom, which some banks based in the UK do not want. Some of the American subsidiaries of these big American banks don't want a race to the bottom because they know how that ends. Ends in financial crash and you begging for taxpayers to help you out again. Do you really want the iron frustration of another taxpayer bailout? Like, really, my guy, is that what you want? As well as competitiveness mandate in the FSM bill, it also includes proposals to grant the Treasury the power to require a regulator to review their rules and establish cost-benefit analysis panels ahead of rule changes, and having impact assessments is fine. A cost-benefit approach will probably lead to ministers saying certain policies, certain rules just are too stringent and are holding companies back from making a profit, saying, oh, this company could make X amount if you get rid of this. This isn't my area of expertise, but I really don't want to see another financial crash, and I can see that's how this cost-benefit analysis will go. These come in addition to the main existing form of scrutiny, which is Treasury Select Committee hearings. The FCA said it welcomed debate around how it should be held to account, saying, quote, "We welcome this debate as we move towards a more outcomes-focused system of regulations. That is why we have published metrics that will allow others to hold us to account," end quote. This from an FCA spokesperson. They also added, quote, "Both operational independence and proper accountability are vital to a well-functioning regulator. Scrutiny allows us to show we are meeting the objectives set us by Parliament," end quote. And that's why I'm worried about them adding competition to the mandate, because that shouldn't be what a regulator's job is, to improve competition. That's up to the companies to compete with each other. That's how you get competition. It just don't make sense. So the PRA declined to comment. I wonder why. I think what I wouldn't mind seeing, which is something they can actually do now, I think, which is to bring these trade body people in and the others who want the kind of deregulation, bring them into one select committee hearing, right? Ask them the impacts of the stuff that they want, and for the MPs to do this to their best ability. So what do you want specifically? What areas do you want deregulated and why? And what are the impacts on the economy if we do that? Having experts there try and give analysis as to what they think is true and not true, right? Said on a given day. Then on a later day, maybe in a week or a couple of weeks, bring in the regulators, bring in the people on the PRA or the FCA, wherever, right, the relevant ones, and put what was said to them. Ask them, what is the impact of these things if they happen? So they have time to prepare answers. Keeping some sort of firewall kind of between regulators and trade bodies. Maybe I'm wrong here, I don't know. Like, again, this is not my area of expertise, but what I don't want to see is regulatory capture or another financial crash, especially one that requires taxpayer bailouts. Like I said, things are getting choppy right now. Some banks are going under, and that's never a good sign when banks go bankrupt. Really isn't, because that shouldn't really be happening. And like I said, Silicon Valley Bank is one of them, and there are a few others as well that collapsed in America. That's not a good sign for the next couple of years, especially for the UK when people are saying, "Oh, we've got these new powers after leaving the EU. Why don't we deregulate stuff?" That doesn't end well, you guys. But anyways, I'm going to leave it there. Let me know what you think in the comments below. Like, comment, share, subscribe. Support the channel on Patreon if you can. And hopefully I'll see you in the next one. And hopefully I didn't put you to sleep.